A piece of paper signed abroad turned desert sand into Europe's invisible owner. The empire that now manages trillions of dollars globally was born even before its own country. February 23, 1953. In a discreet office in the city of London, a handful of British financiers and Arab emissaries founded the Kuwait Investment Board. The goal was simple: take the oil surpluses gushing from the Persian Gulf and buy assets overseas. This happened 8 years before Kuwait declared its independence. Welcome to Plexo. The world didn't know it, but that day, the first sovereign wealth fund in history was born. For decades, resource-rich countries simply hoarded gold or dollars in their vaults. Kuwait changed the game. They decided oil was finite, but capital, if invested well, could be eternal. That London experiment grew into the Kuwait Investment Authority, a giant that now manages over $800 billion. They bought ports, airports, and electrical distribution systems across the planet. The idea was brilliant, and soon copied by its neighbors. The Persian Gulf understood that true wealth wasn't about selling barrels, but using that money to buy the veins of the Western capitalist system. One image defines this era: mountains of British real estate contracts piled on the desks of sheiks barely beginning their sovereignty. An unprecedented transfer of wealth had begun. March 21, 1976. Sheikh Zayed bin Sultan Al Nahyan, his face weathered by the desert and his white robe always immaculate, picked up a pen and signed a historic decree. He had just created the Abu Dhabi Investment Authority, known as ADIA. His vision was clear: oil had transformed his emirate, but it wouldn't last forever. Instead of spending the massive revenues on short-term megaprojects, Zayed decided to build a financial shield. ADIA didn't operate like a traditional bank. It was a silent predator, designed to absorb government surpluses and deploy them in global markets with calculated risk. While other countries bought short-term debt, Abu Dhabi started buying the world. They bought stocks, bonds, real estate, and infrastructure. The fund operated with absolute secrecy, free from internal political pressures, focused solely on multiplying money. The scale of its ambition materialized in entire skyscrapers in Manhattan and shopping centers in Europe, bought in cash and transferred to shell companies controlled from the desert. ADIA manages nearly $1 trillion, operating from a glass tower on the Abu Dhabi Corniche. Zayed's seed capital turned a small emirate into a global financial titan. They no longer needed to extract wealth from the earth, because now they collected dividends from the largest companies in the West. Desert money had taken root on Wall Street. October 31, 2008. Barclays headquarters in London. Global financial markets were collapsing, and traders' screens flashed red. Panic was total. To survive and avoid being nationalized by the British government, Barclays needed a massive capital injection. At that critical moment, the saviors didn't come from Washington or Frankfurt, they came from the Persian Gulf. Qatar and Abu Dhabi opened their checkbooks. In the largest private rescue deal of the century, the royal families of both emirates pumped more than £7 billion into the bank. The global power dynamic had just flipped. The former British Empire was being bailed out by its old spheres of influence. It was a brutal deal. The sovereign funds demanded extremely favorable terms, buying a giant stake at an aggressive discount. One image captures this moment: European bankers sweating in wrinkled suits after sleepless nights, signing away 30% of their institution to Arab emissaries in tailored suits. The rescue let Barclays keep its independence, but the price was turning the sheiks into its largest shareholders. Years later, the deal would trigger legal investigations and millions in fines for secret commissions. But the message was already carved in stone. Sovereign wealth funds were no longer passive investors. They were lenders of last resort, the only ones with enough liquidity to prop up the Western financial system when everything else failed. May 8, 2010. The posh Knightsbridge neighborhood, in London. A £1.5 billion contract changed hands. The Qatar Investment Authority, created just in 2005, had just bought Harrods, the most iconic department store in all of Europe. The seller, Mohammed Al Fayed, handed control to the sovereign fund run by Sheikh Hamad bin Jassim Al Thani. This wasn't just a real estate deal. It was a statement of cultural dominance. Qatar, a country smaller than many European regions, was using its $65 billion sovereign fund to buy the icons of the West. Its strategy was aggressive and highly visible. They didn't want to hide in boring bond portfolios, they wanted the trophies of capitalism. The list of acquisitions grew at a breakneck pace. They bought the London Olympic Village, financed the Shard, the city's tallest skyscraper, and acquired the Paris Saint-Germain football club in France. The Gulf funds showed that unlimited money can buy prestige, political influence, and image laundering. By snapping up luxury brands and sports teams, Qatar inserted itself into the daily lives and emotions of millions of Westerners. They were no longer a distant country exporting natural gas. Now, they owned the streets where the European elite walked. Today, the combined financial power of Kuwait, Abu Dhabi, and Qatar defies human comprehension. Together, these sovereign wealth funds control over $3 trillion in global assets. They own massive stakes in automakers, tech giants, multinational banks, and vital infrastructure networks. Their patience is infinite, because they answer to no election cycles or anxious shareholders. They are designed to survive the end of the fossil fuel era. When the last oil well runs dry, these nations will still collect tolls on European highways, receive dividends from American corporations, and lease offices in Asian capitals. They have achieved the ultimate financial alchemy, turning a finite natural resource into an indestructible paper empire. Yet this concentration of wealth creates immense geopolitical tension. Western governments watch nervously as critical infrastructure falls into the hands of funds controlled by absolute monarchies. One image defines this new order: British servers processing European data in buildings owned by a distant emirate. Persian Gulf sovereign capital has completely rewritten the rules of modern economics and sovereignty. They have proven you don't need a massive army to conquer the world, you just need to buy it, block by block, share by share, until absolutely no one can afford to ignore you. The Gulf didn't conquer the West with armies, but with its own deeds. It bought the house, the bank, and the sidewalk, and turned us into perpetual tenants of our own system.